following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are doing good. Thank God it's Friday. We're going to take a look at the S&Ps first. And the reason we're going into this is just give a little dissertation on how I like to see these things acting from a certain way, and then what do you do when it actually does happen that way. So what we're going to do here is we're going to kind of go back to immediately the breadth situation, which we kind of looked at, and we were like, where's the risk? The risk is to be long right now. So let's try to find areas, battle points, if you will, to try to get short. So what we did, if you guys are just kind of catching the show, we kind of talked about this weekly situation and this big 2104 number, which was combined with the 2102 number on a wide profile, and that POC, that blue line, if you will, on that wide profile. And we talked about that as a little bit of a target situation the other day on the downside. And what happened was we got down into that area, as you can see, a day or two ago, bounced up. We kind of found more inflection points to sell. This is our 240-minute grid, because remember, the daily and the weekly, those big inflection points that we looked at, we're going to try to use the 240 to kind of guide us around that situation. So we found that area after the breakdown of the 240s, and the breadth was kind of telling us the risk is to be long. Let's take another look at this from the short side. Caught that 2102, 2104 area that we talked about being a little bit of a possible support area, at least in the interim, and then we look at that resistance point on the shorter term 240s to try to regulate this trade down and to stay with it. And then we had the breakdown yesterday. But the cool thing is, and why do I want to say the cool thing is? The cool thing is we had a daily close below that 2102, 2104 area yesterday. And this is quite nice to see, because we closed below, we go back and we reached a low of 2091, 2092 yesterday. So we get below, then we go back and retest that 2102, 2104 DMZ, if you will. That's happened, which is lovely. And we're coming off of that area. So nice situation on the short side. I love the way, this market is really kind of shrugging off, seemingly from an index standpoint, some of the news out there from Amazon, and I know the Nasdaq's a little bit more reactive to that, but this is kind of nice. And the cool thing is now, in my opinion, you can still place stops relative to that 2102, 2104 area above and see what can happen here. I mean, we can, in my opinion, explore the short-term fair auction at least down to 2093, but it's nice to see on a long-term weekly that we're, have a really good chance, in my opinion, based on the action so far and what's going on with the internals, as Basil coined it, the tide of the marketplace. I love it. Just can't stop saying that. The TAS profile breadth, really, which is showing it's been showing a disconnect in all these moves up for the most part for a while, and we've been allowed to think on the short side and be able to try to wait patiently until levels are either approached or broken down below. So I'm still of that mindset. We're showing our breadth right now. Again, when the market opens, we're going to have a little bit more information, because remember, these breadths are based on the internals. The internals, a lot of them aren't even showing a print right now. So so let's kind of keep that in mind, and let's hope that we get a weekly close in the fair auction or in the balanced area, so to speak. And it's a really somewhat easy situation. We get above 2102, 2104 based on your appetite for risk. You got to say uncle at some point, but it allows you to get back in the game, especially with a reference point, looking at the breadth to see if the internals are saying no in a non-weighted fashion. We do not want to cooperate And again, something Steve Rhodes said at one point, just this is, becoming more and more stock pickers market. So trading the index, we're looking at it as kind of a broad guidance tool, again, for the tide of the marketplace. But, using the scanner to kind of drill down and find those instruments that are weak or strong on a relative strength standpoint is quite cool. We looked at a lot of shorts in the past 2 weeks, and I really can't find any of them that haven't reacted well on the downside with any type of market move down, and with any market rallies like we had last week. They just didn't cause a lot of pain. So I'm not going to review all those, but we've got some great candidates that were on the board, the HPQs of the world, the Warehousers, the Lowe's Corp. And when I say Lowe's Corp, I mean the L, not the LOW. Here's Lowe's Corp. I mean, it's just, again, this is a weekly, not a lot of pain. And in fact, last week, even with the rally, just you want to find things showing their hand. Those are the easy trades. If you want to make it more difficult, go find a Netflix and short it. But the premise here is tie the marketplace, block out one side of the market, and find things that are going to be high probability setups relative to that type of attitude. I'm going to get down the list here real quick. We're going to have Eric on at 8:30 today to talk a little bit about fundamentals. But I really can't find anything that hasn't been acting as we kind of suspected it would. Here's the Australian dollar. We've been kind of beating the desk about this one, or pounding the desk, excuse me. Things on our lows go lower, and the long-term trend has been set in place by our profiles, breaking below. People go, what's your target? I don't have a target on this. I'm just going to these are our 240s. I'm going to let the 240s and the dailies regulate this trade. And what I mean by that is we don't have any new information here, and the trade is still on. All right. So you got to be also willing to kind of declare ahead of time. And this is a huge trading 101 thing. A lot of people, things don't work out. They go from day trading to throwing it into their long-term position hope basket. You got to declare what your parameters are before you get in any trade. A trading plan is mega super important, and if you don't have one, you will lose. It's that simple. Sorry to bring the dark clouds this morning. Here, it's just when I see these things, I know exactly what might be going on in people's heads. Japanese yen, again, still trade of the year. Stops below right now, 123.39, acting very well. Canadian dollar, we talked about things on their highs go higher, things on their lows go lower. This is a great example. Here's the daily. Again, at least we have blocked out the short side. So, these have been great trades. These have been you make your whole year on trades like this, and the cool thing is a lot of these trades actually have government intervention behind them in addition to the technical analysis. So these have been really cool situations. Rubles going up, dollars going up, S&P's acting as if we wanted them to act right now. Remember to put your stops in the Shanghai. I want to get into that one just to cover the kind of the globe for a bit. We have, wow. Check it out. We have pretty much satisfied 4184. Talked about that 4200, 4206 to be exact. Wait for the market to come to you. That's happened, and we've pulled back 150 points on the Shanghai since then. I love the action here. Remember, weekly inflection points take precedence, and if you go into the scanner, you can grab all that really quick. You don't need my charts or these inflection points shown on the chart. That's the story on the Shanghai. I think we have a chance to drift lower now, and maybe some cracks in the armor. They kind of saved the day for a while. There's no doubt about that, but I think the cracks in the armor are going to start showing up again on that one from a fundamental standpoint. Been, really non-bearish on the treasuries, and here's a great, example. We kind of crossed the top of the mountain on the POC here, used it as support, and have continued to launch forward. Remember, if the market goes lower, market goes up, these things have traded sideways lately. Market went up 70 points. They traded sideways, and they found support, actually, 125.13. We talked about that. That was the kind of the back up the truck area with stops down below. And then we've just talked about not being short this thing. And market goes down a smidget. These things continue to rise. And if you just go back in time a little bit here, what are we off? Basically, recent all-time highs, just nothing. And any kind of disturbances in the equity market, I'm just going to kind of go back to that normal relationship, in addition to the Fed probably coming out with some new dovish speak or whatever. Here's the gold situation. We talked about staying away from this on the long side at bare minimum. There are no new signs down here. This thing can go lower. It's not on sale. Do not get caught up in something that may drive a new hole in your butt for another $100 an ounce here. Again, let there be some signs first, and don't be the one that tries to pick the bottom on this one. It's a risky situation. That's how you get taken out in a body bag. All right, we're going to take a look at crude oil really quick. A very similar situation. No new signs. The weekly, the story there. Here's the daily. Nothing happening. The only glimmer of hope here, we talked about this 240 yesterday, battle point there. Again, nothing, no shining lights here. Okay, so here we go. I was just reading something in the den. We're going to take a look at one more here. British pound really is now starting to, have a change in tone here. I'm going to pull up the weekly. Don't talk about this a lot, but getting back down below 155.65. Here's the daily situation starting to show some cracks. You can use that 155.32 stops above. I feel like we could have some more downside on this one. Don't talk about the British pound a lot, because the relevance of the euro and the dollar and all that, it's a little bit more of a crapshoot in my mind. So I don't feel like it's the highest probability situation to pay attention to. Now, we did talk about this little situation here coming back down into support on the dollar, and some targets above right now, 97.94. That was coincidental to this situation. The euro maybe finding some areas of resistance at the same time. Remember, yesterday we talked about 110.12 and a half. Hit it, I think, after the show. So that, it's kind of nice how those two somewhat inversely related products acted on support and resistance, which is kind of cool. We're going to be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Thanks for coming back to the show. Got about 5 minutes. We're going to bring Eric on after the next break. We're going to go back to Alcoa. This is just a really good primer on I just want to hammer this home. If you guys are doubling down on this, you got to be willing to say uncle at some point. We talked about this at 15. It is a great example of how anything can happen. And, you might be saying it, your risk now is $10. We get a zero. I don't know if Alcoa is going out of business. But again, anything can happen. Things in our lows go lower, guys. Just be aware of that. Let's take a look at a couple of stocks that had some earnings here. We're going to try to cover those just to kind of give you what's going on with the minefield of Amazon. This is another good example, not to try to roll the dice before these earnings. This thing's trading 588 pre-market. And what are we up, like 20% or so from where we, before the earnings. Boom. You don't want to get involved with stuff like that if you can help it. There's nothing up here to hang on to. There are no inflection points, and the scanner, by the way, is Amazon. Sometimes the way we do our dailies and things like that on there, it's not going to show some pre-market activity very well. So just be aware of that, guys, who have the scanner. Let's take a look at a couple other ones. We took a look at Caterpillar. Actually, I just want to revisit that. Kind of showed its hand early on this one, but again, not wanting to get involved with some of the earnings news. What do you do with it now? It's not on sale. There's nothing down here to peg this off of. And we talked yesterday about this thing just going below all-time lows just to do it. And it seems like the stop-out mechanism here for a lot of folks is still in order. So watch out for that. Let's just wait until we have some new inflection points. If you got the scanner, this will be the case. It will tell you a yellow peel back when there's a hint of something changing on the dailies. And I think that's kind of what you need to pay attention to on that one. again, earnings related situations. Let's look at FCX really quick. I mean, let's see here. Happened to my, okay. Let's look at FCX. Not a good situation. Really, I didn't even really have to look at this to just guess what was going to happen here. Again, it's not on sale. It's a $13 stock now. It is what it is. This is what, again, you got to step back and say, you know, this is what the market has determined the fair price of this thing is. And it is what it is. It doesn't have to go back up anytime soon. The golds and the iron ores of the world and the things like that from a fundamental standpoint are going to be just going to have to, the tone's going to have to change on that whole situation. General Motors, let's take a look at that one. Strong results, but the action, let's see, 31.75, and that's how we're at right now. I don't know if that's, is that a real print up there? Yeah, it is. Okay. So, you know, even with the glorious results or whatever they want to call them, we're still not acting that well on this. I mean, we're up from obviously the bottom here, but the fact of the matter is this is our weekly situation. We basically went back up and touched the weekly unfair lows and came off relatively hard. So again, would I be buying this stock? No. You got other better opportunities out there. Let's take a look at Celgene. All right, so again, the XLV put a gun to my head, make me buy something right now. Still on board with that sector. Here's the situation on Celgene. Nothing to hang on to up there. This is kind of short-term support, 136.93. Again, I'm not a big fan of buying stocks right now, but this one I would cross off my short list, put it that way. McDonald's. Let's see, here we go. This is your kind of Maginot line on this one, 98.63 stops above. I'm not opposed to shorting this one. Let's take a look at Starbucks SBUX. This is also, these are ones that are in the scanner. You can type it up and get all this information without even having the charts. Reacted well on the earnings. Again, this is something not been on the short list by any means. What do you do with it now? What you do with this now, if you want to play around with fire, you got to wait now until we get below 56.16. And I think the wishful thinking on this is pretty short, a short span of a target. It's just, risk reward, not good on this. Strong stock in a market that's a little iffy. We're going to go to break, come back, talk to Eric for a little bit. We're going to move on, look at some other stocks that are in the news.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates.
And should they decrease, no worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I think we've got Eric Courtney on with us today, the mayor of Wall Street. Eric, are you there?
I am here. Good morning.
Hey. Good morning. Good to hear your voice, my friend.
Yeah, you too, John.
Hey, so look, we just want to get your opinion on some things. So we got mired up in the grease, the Chinese thing. Is it all over, and do we have clear skies ahead? What's your opinion?
My opinion is that we are like California fighters. We have put out so many fires in the last several months, Greece being the last one. And, what happens is everything old is new again. We've gotten through an awful lot. And I think there's a time now to do a little bit of reflection on the trader part. Clearly, they ought to be reflecting, their goals, their methodology, how they're looking at things. What you're doing and giving them is what side of the market to stay away from, what the breadth dynamics are. That's the key. Then they can drill down to what they want. There are numerous ideas out there. You've got to just keep your ears open and watch what's going on. The merger and acquisition phase has begun again to the point of it's so huge and going to get huger in the insurance and the healthcare and so many other companies. But the bottom line is that earnings are still being what I call buyback stock earnings. And you're seeing that time and time again. And what we're going to have is there's going to be a sea change, I believe, in analytical observation of earnings where they're going to start looking at the top line more. They're going to start looking at the profit margins more. They're going to start, they're not just going to say, oh, earnings are up 8%, 10%. Oh, they did 3 cents better than, I write comedy stuff, and I do it for a guy, Saturday Night Live, and I'm working on a stand-up comedy thing. It's going to center a lot on the joke of Wall Street. And the big joke is what Wall Street has done. It has dealt from the bottom of the deck since time began. It is still doing it. I don't care about all the high frequency and all the advancements in technology. The bottom line is, if you use good judgment, watch the most important being the breadth of the market. Where is the market going? Then you can pick your spots. And you can stay away. Like, you've kept people away from gold. You've kept people away from certain forex. You've gotten them involved in certain forex. You've made good long-term calls. What does this mean to a trader? Well, I feel sorry for a guy comes in and he feels like I do this morning. Like, all right, what do I do now? Let me think. What do I do now? I have a broom back here that I keep. The only thing on my wall is a broom, because the old Italian proverb said, a good new broom is good for 3 days. That's it. In other words, we don't have time to say, gee, we're going to buy the rails, or gee, we're going to buy oils, or gee, we don't have that type of scenario anymore. We have a very difficult social scenario. The labor market is not great. I don't care about the numbers. Yeltsin is probably not going to be doing anything for a while, and when she does, it'll be somewhat of a good thing. But I think it's a good time for traders to reassess their goals, reassess what their real focus is going to be on. And I recommend TAS. I'm not the greatest salesman in the world. I have a tremendous little network that I'm going after, and I think I'm starting to see some light at the end of the tunnel here. So that's good.
Talking about the rails, I just pulled up CSX. This has been one we kind of been pounding the desk on. Tom and I were actually, talking about the rails, and technically speaking, it's just been, consolidating around these lower inflection points, especially on the weekly here, and then the daily. We kind of got the retest as we were breaking back into the, those weekly unfurloughs, daily unfurloughs at the same time. So, it's very difficult to take on any long-term stances right now. And I was actually on with, just to kind of further what you were saying, Eric, a guy who's running a family office up in Manhattan, $100 million on that branch. That's not a lot of money for big-time money managers, but of the whole piece of the pie, I think they've got over $1 billion in the total family office situation. But he's just, I talked to him the other day. He's a guy who uses our scanner, and he was like, man, he goes, this is just not the time to step in large and take any large positions either way. It's like a trader's market, and it's a stock picker's market, and that's just the way you have to look at it right now, or just get out of the kitchen and sit still in cash and making 0.00001% or whatever you're going to do, because the risk of stepping in large right now is huge.
Very important comment you made about the cash. Cash is huge, which is a positive for the market, but it also tells you that there's something underlying everything that says we're high, we're putting out fires around the world. Basically, what do we do next? What do we do next? I'm doing some work on the economic scenario and a couple of things for people that I know that are politic involved, about what is the theme that they've got to start looking at in 2016. And I'll tell you what the theme is. We've got to do more. And then we've got to do much, much more. And then we've got to do our best. And then we've got to do better than our best. So it's going to be a very, very dynamic transition to people looking at what they are trying to do and how to go about doing it. I mean, we've got to,
yeah, no, it's interesting you bring those things up. I mean, it's I don't want to call Trump our savior, but the rhetoric he uses, as self-promoting as he is, and as personally as I don't like the guy the way he carries himself. It's what, people are looking for guidance. There's not a lot of direction out there, and they're sick of things. And I think that's spilling over possibly to the marketplace this time. I mean, do you know Trump? I mean, you've been up there forever. You're in his backyard there.
I used to walk behind him almost every other day on between Grand Central and his office.
Okay.
And the man continually talks to himself.
I've never seen anything like it.
You can almost hear him. He's talking to himself all the time. This is a boy that was given $40 million worth of property out in Queens when he was 21 years age. I think if I had $40 million in Queens the time he had it at 21, I'd probably have my name, Courtney Towers, on just about every building in the world, okay? The guy has done what he's done. He's saying things that appeal to the very right-wing side. There are truths in what he's saying. He's always going to give you a little, something that's going to be true. I just finished a book, a very interesting book by Harper Lee, which was the book she wrote before To Kill a Mockingbird. Mm-hmm. And it shows the Southern man, the guy in the movie, Gregory Peck, played like he was a savior of civil rights and defending. And in her mind, what he did was he took on a case which he was assigned and proved that justice is important more than anything, and proved that if a man is innocent and you have the evidence, you get him off. But underlying it all, he had a very deep, bigoted, prejudiced attitude about things. Right. I think a lot of people have the same. I see it in New York. I see it constantly. New York is an interesting place because everybody cares about paying their rent. So they're not really worried about walking on the train and saying, white man getting on train, let's fight. They're basically not interested in doing that. But there is a real disconnect between the minorities and the old school Puritans, okay, let's call it, and that is one of the things that over the next several years, whoever is president, and I think Obama is going to take a big role in leadership in this regard. I do think so. I also think Hillary is your next president. I see 30 to 40 to 50 guys running, I mean, they're going to emulate. They're going to just fall under their own weight. Jeb Bush has not impressed me. The other guys are a little bit young. I'm not sure who they're going to bring up. But Trump, to be number one, tells you what the Republican mentality is. And it is still a hang the Confederate flag over the state capitol mentality. Believe me, it is. And we're going to have to fight that. We're going to have to start making love is going to have to be a word we bring back. We have to get along. This country is no longer what it was. And I see it and I know it.
Let's try to those are great comments. Let's take a look at a couple other things that are going on here really quick. Apple's obviously been all over the place, guys. I just want to kind of reiterate where we're at relative to profiles here really quick. I mean, we caught that 121.5 bounce we talked about the other day, but we're kind of sitting at the bottom of or at the edge of the cliff here. We get any type of market movement down in a general sense. I mean, Apple could start cooperating and cause that literally being on the side of the cliff to kind of start getting some legs, even more so. Keep your eye on Apple. Apple getting below that 120, 2470 area is going to be a big deal, and especially a weekly close below there. That's going to be somewhat damning for the NASDAQ and the market in general. Eric, I know you've been a huge fan and just right as rain on the healthcare sector. We've been talking about that a lot. Some of the stocks. Put a gun to my head and force me to buy things. I'm all over that sector. What I want to do here is just kind of show everybody in this heat grid on our scanner. We've got an ETF section that kind of shows you where the money's moving relative to profiles on a very short-term time frame, 60-minute, 240s. You can see right across the board, actually, as of yesterday's close. A lot of these stocks haven't opened. But this is something I kind of keep a separate scanner up and just kind of look at the sectors as they react to profiles. And I look at the ETFs and the levels that they're at in general. But if I see something I want to kind of act on, I can drill down into it really quick and just kind of figure out the relative strength trade as it might be unfolding. Hey, look, we got about 3 minutes left before we go to break, Eric, and I just want to get your thoughts. The euro, where do you think that's headed? Because I've been relatively bearish on that and selling every rally, getting stopped out a couple of times. But, general thoughts on Europe, where that might end up being in the long term.
I think the euro is going to climb back up a little bit. I think whatever goes down that far is going to always have a bounce back, and I think there's going to be more conviction on the part of Europeans if they can keep Greece under control. I think what's going on now, it's under the table stuff. I don't think it's any longer the press. I think they're going to feed them and keep them going, and I think that Merkel has realized, Germany is interesting. I had a concept on Germany there. The First World War lost, which created the great Second World War, lost. I've always believed they are in for a Third World War, and the Third World War is going to be economics, and they are winning that Third World War. They have deep, deep conviction about German correctness and German attitude, and the rest of Europe doesn't, okay? Spain, Portugal, Italy, I mean, come on, you talk to an Italian, they don't pay taxes, but they do buy the Italian bonds, okay? Greece is a mess. They're going to have to just keep Band-Aiding it. I'm glad they stayed in because I think Greece could have been, a real international problem. But the euro, I believe, is going to start moving a little bit further to the north side at some point here. You've been very correct on it, but I wouldn't expect until it may go to parity. You never know. I watch what the Saudis do and what they buy. They're not buying the euro anymore, okay? Yeah. The Saudis are the smartest guys on the block. They are the ones. 73 you mentioned before. That was the Saudi depression because that's when they tripled the price of oil. We had gas lines. We had a recession.
My father owned a gas station when I was young, and I remember like the back of my hand. It was amazing to go down there and see all that. And I remember he had me washing cars one time. I think I was like 7 years old or something, and gas was so precious back then. I mean, I put gas on a rag and go wipe the tar off the bottom of a car. I mean, I didn't care if it took the paint off, but he kept going. He goes, man, that's enough gas to go to Raleigh and back. I mean, it was a precious commodity. It was interesting times.
Yeah, it still is. And the rails, by the way, the oil is still a big factor. It's a big factor in transportation. It's a big factor in Mexico, Burlington. What the hell is the name of it? Kansas City Southern is the only railroad allowed to play around in Mexico.
Wow. Hey, Eric, I hear the music. I really appreciate you coming on today.
Okay, I've got plenty of things to talk about. I want to talk about some of the guys who are the backbone of technical analysis, guys all the way down from the Bachelor to the Mandelbrot, all those guys the next time.
Guys, we'll be right back from break in just a little bit.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Thanks to Eric for coming on today, getting a general longer-term tone of things from a fundamental standpoint. I mean, everything Eric says actually causes me to think the euro is going to go lower, though. There's obviously differences of opinion there. But I'm looking at the technicals, and the technicals will, allow us to look at the euro a little bit differently when it starts showing some technical damage to this long-term trend down. And when I say the long-term trend down, again, turning the rents the same way. We're kind of going back and retesting now that unfair low on the weekly balanced area. And again, nothing's been technically damaging really to this on a long-term basis relative to profile since 135. Bottom fishing is bottom fishing, but I'm just kind of looking at this the way we've been looking at it. So here's the situation on the S&Ps. We're going to try to wrap up some things. We talked about that 2104, 2102 area being really, really important. And what we've had happen, if you missed the beginning of the show, we kind of had that close below on the daily, go back and retest actually this morning, right there. And we actually had some 240 resistance areas we've been looking at around the 2113, 2114 area. So I like this action. I like the disconcert, if that's a word, of the internals. That's not the S&Ps. Let's go back to the S&Ps and look at the breadth situation. Probably going to see these roll over even a little bit more farther south here. But remember, guys, on a short-term basis, you're trading short-term. This 60-minute crossover is a trading system in itself. So what I do for you guys who are trading short-term, I mean, the long-term tide of the marketplace is those weeklies and dailies. But short-term 60-minute, these are this crossover system's again, a system in itself, always in the market long or short. But what I do is I look at the futures inflection points here, like on the S&Ps. I get an idea of where the major pressure points are. There's 2104. There's that 2102 POC, and there's that 2104. So 2104, 2102 again is kind of the Maginot line for me right now. And I'm considering this to have the possibility to drift lower. And to have a close to further that on Friday here below 2104 would be pretty interesting now for to have the breadth kind of guide us in the right direction from here on out. So that's the way we're looking at that on the U.S. S&P 500. Now, some of these, we haven't talked about the Nikkei a lot lately. It's kind of lagging the latest moves up in the devaluation of the yen. I'm not really focused on that trade right now, but I do still think the yen is a nice little trade, and you've got, again, something to lean on pretty hard there from a fundamental and a technical standpoint. Oil can go lower. It's not on sale, just to kind of recap some things. And let's take a look at Netflix here. This is another big market cap situation we got to pay attention to. It's drifted lower without question back into 110. Here's the daily situation. No new profiles up here, so I would stay away from this on the long side or the short side. It's just not a lot of. And here's the 240s consolidating. It's kind of, in a sense, looking like it's going to spike again. But I think the market in general is going to head south. So we're trying to block out that side of the marketplace in general. So, again, using the scanner, got about 20 seconds left here, trying to find short opportunities, doing a sort below the box. And these are the candidates that I've got on my radar screen here. And there's a sea of red, and there's quite a few things to pick from in a stock picker's market. Stick with your guns, guys. Don't listen to CNBC, listen to TFNN. We'll be right back. We'll be back Monday. Have a good weekend, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.